Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, August 15th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. Please give me a second while I pick the right one. I'm going to jump to this one, and that is that we did have, and still do have in many respects, a buy signal above the 183.71 speed line. The only problem with this, not that I'm off the buy signal, I do think that the 220s are in reach over the next week or two, but the fact that the speed line is actually dropping below that early August low in the next day or two, which negates its validity. And so we have shifted in terms of buying support. You actually don't have to wait for 183.71. I consider our trend defining support, if you will, at 188.16. Maybe not trend defining, but it is the point, this channel bottom, that if settled below, should pivot the market south into September trade. And it looks something like this. If we were to close below 188.16, I would expect within a week or two 167.41. And yes, over the following couple of months or so, the 129.60 formation should be considered a realistic objective, but not unless we close below 188.16. Until then, it's pretty solid support over the last week and a half activity, and it can absorb selling on a weekly basis. And from here, we can round back up to this descending speed line at 227.28. It really is kind of a 188.16 floor of support through next week and a 227.28 ceiling of resistance, not only through next week, but this could potentially contain buying into September trade, and we could fall away again from there. So there is your 2 to 3 week swing trade, buying 188.16 if you're not long already, and selling 227.28. If you're long already, you're probably holding out for 227.28. And I'm obviously speaking to 2 to 3 week swing traders. Now, for the day itself, I do have 195.89. That is an inside channel using the same highs. It can contain intraday selling pressures, possibly daily selling pressures, and above which, or once tested, the high settlement price that was put out on Tuesday of 207.83 in reach. That is also an intraday resistance level. So we could trade inside the 195.89 to 207.83 area for a good part of the day, perhaps the entire day. If we break 195.89, expect 188.16 intraday, where a buy opportunity presents through next week. Once tested, we can round up to 227.28 and dropping daily within a couple of weeks. Upside today, if we happen to push through 207.83, once again, that is Tuesday's high settlement price. That is the highest settlement price we've had since the low was put out about a week and a half or so ago, couple of weeks almost. If we push through 207.83, 216 likely. That is a 3/8 upside Fibonacci from the July high against that August low. 216 even can, given our proximity from it, contain daily buying pressures. And certainly if we were to close above 216 even, a 227.28 likely within just another day or two. 227.28 still remains a 2 to 3 week objective following the settlement almost a week ago above the 183.71 descending 1/3 speed line. When you close above a descending 1/3 speed line, your objective becomes the descending 2/3 speed line, that is 227.28. Is there anything else? I will mention this descending channel top at 201.47. We've reduced it to a minor point only. Still a tradable level, but it hasn't behaved in the sort of pivot point quality that it often will. It just kind of comes with the territory. It really is this area here, 195.18, down pivot for the day to 188.16, where a buy opportunity presents. And I guess I could say that if you're long still from last week when we posted captured that buy signal above 183.71, you may hold out if you can for a settlement below 188.16, because until then we can bottom out here and round up within a couple of weeks at 227.28. Once again, I don't see it today, but if we did close below 188.16, I see no good reason to be long Tesla as we move into next week and even into September, October activity. I would expect 167.41 within 1 to 2 weeks, 129.60 within a couple of months, where we could actually bottom out through the rest of the year, possibly well into next, but not unless we close below 188.16. Until then, we're expecting 227.28. A 227.28 descending two-thirds speed line, able to contain weekly buying pressures. We could fall away from here also into September trade. And if we were to close above 227.28 over the next week or two, that presents a meaningful buy signal as we move into September trade. The following, this could be a 3 to 5 week move, could take the better part of 2 months for reaching 286 even. 286 even does become our next big picture objective if we close above 227.28. And once again, if we close below 188.16, then we've got a 129.60 as our next 1 to 2 month objective. So bearish below 188.16 into September trade, and bullish above 227.28 into September trade. It's about as simple as that. And inside of all that, you've got a two-sided framework between 188.16, 227.28, where 2 to 3 week swing traders can trade both sides of the market. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla report. You have a great evening.